Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia.
And I'm Tanveer Gill. And just highlight, it's been a weak start to this trading week where we are also going to be looking at futures and options expiry. 2% lower is how the market shut today. It's the best time to get a check on what the outlook for the market seems like in the near term. Ramdev Agrawal, Joint Managing Director and Co-founder, Motilal Oswal Financial Services, will join us with his views in the market. Sudhir Bandyopadhyay will also talk about his market outlook. And Sandeep Wagle will give us his technical view as well on the index as well as stock-specific views.
Okay, let's start our panel discussion now, starting with you, Sudhir Bandyopadhyay. What spooked the markets today? The after adjustment of the credit policy or the big spike in the bond market?
Nikunj, I think it was a combination of both, but I think predominantly it got driven by the credit policy related disappointment. Of course, I should also mention the fact that there is an important deadline coming in US. The US debt ceiling expires on 30th of September, and I'm sure there will be a lot of haggling in Washington, between the Obamacare, pro-Obamacare, anti-Obamacare group before the debt ceiling is enhanced. So debt ceiling will get enhanced, but I think next 7 days we will see a lot of nervousness in the US markets, and that will permeate into other emerging markets, including India. Having said that, I think there are still enough, opportunity for Indian markets to go up at some stage, provided certain administrative and bureaucratic decisions are taken with some political courage.
Fair enough. Ramdev, come to you. What's happening to the markets? And I'm sure you can't speak off the markets with the same zing. September has been a month of extraordinary volatility for the market, even though we've come back from our August lows.
Yeah, that's the worrying part, in the sense that in any case returns are not there, and on top of it now you have volatility also. So it gives a kind of unease in terms of the feel is not good in terms of your portfolio. Some days is up 5%, some days is down by 3%. So I think volatility with no return is an even bigger disaster than just the no return kind of situation. So it's been a difficult period in last 1 or 2 months. You can't think very clearly in this kind of environment. But it's okay. You have to accept what is. My sense is that volatility will further increase and it will become far more frequent than what we have seen in recent past.
Sandeep Wagle, what's going on? Either this market is going up or it's coming down. There is no in-between path. Either we are up 100 points or down 100 points.
Good evening, Nikunj. I think the fact of the matter is 6100 is a very, very strong resistance, which I think come what may will not be crossed in the short run. When I'm saying short run, I'm talking of a few months, probably a few quarters. And when it is crossed, then we will obviously go to make a new high and probably go much higher than that. So till such time, this is the situation we have to face. Having said that, I am not that bearish. I don't see the Nifty breaking 5800. And yes, if 5800 is broken, then I would talk of a 5450, 5500. Then I would say the short-term positive trend that has emerged over the last few trading sessions, that is negated. So I would still say this is a corrective move of the impulse that has happened from 5750 to 6150, and we will probably correct till 5800, but we may not break 5800, and we may move in the range of 58 to 6000 over the next few days or weeks. In case 5800 is broken, then my view would be bearish for the short to medium term.
Fair enough, Sandeep. Ramdev, in the month of September, first we saw 5200 on the index. Then, of course, we scaled back from that. This is the August lows that I'm talking about, to 6100. Based on valuations or earnings forecast for FY14, what to your mind is the number or the range for the index right now?
It looks, we're still in the trend kind of thing. This 5,000 to 6,000 or maybe 5,300 to 6,200 kind of this 1,000 point range. Sometimes it happens from 55 to 6,200. Sometimes it goes to 5,200. So I don't see anything right now except for the political change in next 6 months, which can actually can have a huge impact in terms of expectations from the market, in terms of earnings growth or what policies can deliver. Or I really can't see anything big happening in very near term except for the politics.
Well, the stock of the day has to be State Bank of India. That stock broke the back of the market, lost more than 90 rupees, was the biggest loser on the Nifty and on the Sensex. State Bank of India often is the lead indicator of market mood. It always tends to lead the rally or lead the decline, and today unfortunately it led the decline. 1700 on SBI is gone. It closed at the highest point of the day. Flip it around with the daily volume, and it actually cracked on very strong delivery based selling as well. Sudeep, what is the problem for State Bank of India? Valuations are looking mouth watering, but on every uptick, institutional investors are simply hammering the stock down.
I agree with you, Nikunj. I think, one has to be extremely careful in PSU banking stocks, including State Bank. This is one bank where the CMD has been consistently saying that they are under pressure, cost of funds are continuously rising, and they are struggling to maintain margins. And we must understand the message very clearly there, that their business, opportunity of doing business, opportunity of making margin is shrinking because of high cost of funds. Apart from this, there is a huge problem of NPAs, the CDRs happening all around us, and the economy not going anywhere. State Bank, being the largest bank in the country, have exposure in pretty much every sector, and their exposure in infrastructure, capital goods, power projects is huge. So if these projects are not going anywhere, if these promoters are facing difficulty, State Bank is bound to face difficulty, and that's getting reflected in their numbers. Quarter after the quarter, NPAs are becoming more and more alarming. Margins are shrinking. So I think one has to be cautious. Valuations, irrespective of being attractive, I think it's better to stay away.
Sudeep, jump in on this entire reversal in today's trading pattern. IT stocks are back and banks are down. Do you think in the short term the scales are tilted in favor of going out of banks and in favor of going into IT stocks?
Definitely, yes. In fact, even last week I was mentioning to you, Nikunj, that the optimism and the enthusiasm in bank was little bit too much, and it was little uncomfortable. The problems of Indian economy hasn't disappeared just because of liquidity tapering in US not happening. If we become so buoyant on banks, the risks were very clearly visible, and that's exactly what is happening. On the other hand, there is absolutely no point getting out of IT. Yes, rupee appreciation, whatever happened, definitely doesn't help IT companies. But fundamentally, these are strong companies. They're doing pretty well. US recovery is strong. They're getting business. Most of them have actually gone out and put out numbers which are much more impressive than the Indian economy's, the growth projections. So all considered, I think there is absolutely no logic in not looking at IT. So staying put in IT or even adding IT at current level is definitely advisable.
Fair enough, Sudeep. Ramdev, come to you. Is it time to start cherry picking within the banking space, the likes of an SBI or some of the key private banking names, or do you think the market will give us better opportunities to enter in? We could perhaps look at retesting 5200, which would be a good entry point then.
Yeah, so we clearly saw a very big opportunity when there was sell-off at 54, 5500. All the best names in private sector banks, they came down to very, very attractive levels, and that was an opportunity for a day or two. So, you might get the same kind of opportunities again, trying to time exactly the bottom and lowest price. Even now the prices are not that unattractive. If somebody has courage and one wants to buy into the stocks, clearly one should buy the best names even at current prices. So it's fine to buy at these prices and keep buying down all the way down if market corrects.
Ramdev, so would SBI be part of that best buy list?
See again, I have a lot of SBI in my portfolio. So, and I'm pretty comfortable having them right now because financials are cyclical. I mean, they take the maximum brunt of business cycles in the economy. So right now they are taking the brunt of the entire business cycle on their credit cost and the profitability, and more than the profitability, the opinion about the profitability, which is what is determining the stock price today. So, I mean, I have seen these cycles 3 times in last 15 years, and there is no reason to believe that there is no story ahead going forward for Indian economy and financial sector and SBI. So, in the short term we learn a lot, but in long run it's back to same, sell low and buy high rather than buying low and selling high. So that's the story of most of the cyclicals, particularly high quality cyclicals like SBI. So I believe with the faith that India will have its own glorious times, maybe sooner than later, and we'll get our fair valuation of our stocks.
Sandeep, on the charts, while we've spoken about banks and the way they fell in the session, what about IT, which continues to buck the trend on any big fall day?
Well, IT has been a very strong space, and I absolutely agree with what Nikunj said. I think buy IT and sell rate sensitive should be the mantra for not only the next few days, but maybe a little more than a few weeks. I think the IT space continues to show momentum and good traction even from the current levels, like an HCL Tech. I see a very clear 7-8% move even from the current levels. So yes, buy in IT, HCL Tech would be the best pick in that space. And there is some more downside in the banking space. Now, whether be it private sector or public sector, I see weakness all around. So at least a 7-8% downside in the banking space and the rate sensitives, and an equivalent upside in the IT space.
Sudeep, let me throw in the joker in the pack, and the joker in the pack here is clearly metals. High beta, but a high beta space which potentially could do well if rupee continues its decline.
I agree with you, Nikunj, on the rupee decline part and metals, domestic metal companies becoming more attractive globally as far as their business is concerned when rupee depreciates. But having said that, I'm still not convinced on the metal story and whether metal will give you good returns in this fiscal. Predominantly based on the fact that global recovery, particularly the Chinese recovery, has still not shown enough legs. Yes, there is some recovery. Yes, there is some excitement back in China. But how real that is, how sustainable that is a big question mark. And I'm still not willing to buy metals, and put my bet on metals.
So, aside of some of the private banking names, where else are you turning bullish at this point, Sudeep?
Private banking names, yes, as I was saying that, the banking space as such, we are not very bullish. But if I have to take a bet, I will definitely love to take a bet on an ICICI bank or an HDFC bank, maybe even some of the smaller private sector banks. But I will definitely not touch PSU banks, predominantly because of the fact that I'm scared of the NPA issues plaguing these banks. Yes, some of these banks are available at 0.4, 0.5, maybe 0.6 time of their book, but I'm not sure about the book, so I will not touch those PSU banks. Private sector, yes, little bit of exposure in private sector bank to take the benefit of the turnaround whenever it comes. I will advise.
Let's take a look at what are the stocks which will be on the radar tomorrow morning for tomorrow's session. That is, Pranay joins in with the list. Pranay.
Well, Tanveer, the first stock to keep on your radar will be Persistent Systems, and the mid-cap IT firm is one of the favorites that mid-cap funds are now turning buyers into. And why they're buying is because they see a strong upside in the IP side of the business, which they see a growth of 25% in this year compared to a deceleration that we've seen in the first quarter. Also, if you look at the linear side of the business, the platform side of the business is expected to kick off with good traction, led by the pickup in the revenues from the US market. And both these together will obviously help in significant significant margin expansion, which was rather muted in the first quarter. So on the back of this, also it trades at a 10% discount to its mid-cap peers like Mindtree. That is why on a valuation basis too, it looks very attractive, as it hasn't participated as much as others in the recent rally in the IT stocks. So this is one that they are recommending on a positional basis. Next one is RPAR, which is largely on a trading basis and purely on technical trends, where the stock has remained in a narrow range of 65 to 70 in the last 1 month, but it has just now broken out of that trading range. Also, dealers are indicating HNI accumulation in the counter, so they see the momentum continuing and the stock might scale to levels of 80 soon.
Right, Pranay, thanks a lot for that. Sudeep, what is on your watch list? Where are you allocating capital?
Well, I think, Nikunj, there are a few areas where we continue to remain bullish. One is two-wheeler, particularly Bajaj Auto. Company with 1/3 of its production being exported, rural India doing well with good monsoon and forthcoming election. We think Bajaj is a good buy even at current level. Somebody with 1 year plus, a hold in mind can get 20% plus return from Bajaj Auto even at current levels. Other, sectors, if one looks at, again, those are related to the economy and the currency depreciation. Both, MRF and Bayer Crop Science are our other picks in the mid-cap universe.
Right, fair enough. Come to you, Sandeep. What is it that you'll be watching out for in tomorrow's session?
Tanvir, as I talked of buying the IT space and selling banks, I would be a seller in Axis Bank, stop loss of 1056, target of 972. I would have a buy in HCL Tech, stop loss of 1071, target 1144.
Ramdev, let the last comment be from you. You are of the view that this market is giving you select opportunity and it is time to bet, and it is time to bet big. So where is that opportunity, Ramdev? Spill your beans. What are you buying? Where are you allocating capital?
It's, whenever it comes, Nikunj, it's very difficult to say, this is right, because that you buy a stock, you tell the world that this is what I bought. A lot of people, they end up buying and I go wrong. So what happens is, when I'm wrong, I can probably correct my mistakes. But it becomes very difficult for the masses to, correct that, and they get stuck. So that's not right to, and popular stocks like big caps, clearly you can see, one can take a judgment on their own. It's not that difficult.
Okay, gentlemen, it's been a rather tiring session for the market today, but thanks very much for joining us and giving us your perspective on what to expect from the session tomorrow.